That's what's really crazy about sports betting is these concepts are very, very similar. Understanding trading strategies is extremely useful. And the markets are so fragmented, you can literally hit these arbitrage bets, make risk-free money. Like, why overcomplicate this? Is what I always tell people. Just take the easy money.
Yeah, that's really the point. It's kind of like trading where 99% of the traders lose, and you want to be the 1% that actually wins. And one of the ways to become that 1% is to focus on the odds and to find the easier picks. And if you've got a tool that can help you identify the pricing for this one game right now versus the pricing of another game, that can be high probability win because you're just comparing the pricing and odds. Hi everyone, I'm Lien, and I'm here with Alex Monahan of Oddsjam. Alex is a former trader for Susquehanna, and I remember when I first talked to him, he was so modest about it. He told me that he started trading with a company in Pennsylvania called Susquehanna. For those of you who don't know, Susquehanna is one of the world's largest quantitative hedge funds, and you really have to be the smartest of the smart to be hired. I know because I tried and I didn't even get a call back from them. Having been a former Susquehanna trader is one of the main reasons why I was compelled to hear Alex's story and the story of Oddsjam, a company that allows you to compare odds across different sports betting brands to give the community an edge. And, it's actually a really good timing because I came across an article in early August quoting him in Barron's talking about how, like trading, too many people come to the market with a get-rich-quick mentality. Instead, his goal is kind of like mine, which is in a completely different way, of course, which is basically to level the playing field and help our communities make smarter picks in the markets and more. So, Alex, welcome. I know that many of our viewers live and breathe sports, and you are a former trader. So I'd kind of like to ask what motivated you to start Oddsjam?
Yeah, so I would say sports betting and trading are very similar. So I always loved sports. I worked as a trader, kind of spent a lot of my time playing poker and betting on sports. So ultimately, when sports betting legalized in the US in, I think, 2018, it's state by state in the US, ultimately took the plunge, started working in the industry full time, and I'm pretty happy I did so. It's exciting. Trading's exciting. Sports betting's exciting, but they're very similar.
So what did you trade when you were at Susquehanna?
Index derivatives.
Okay, so like the equity indices like E-minis and S&Ps and NASDAQ?
Yeah, exactly. I mean, I was pretty junior, so I didn't get the big names, but a lot of the smaller ETFs, a lot of the international ones too, like the, like BlackRock Brazil ETF, EWZ or whatever it is, but probably had you probably have like 400 or so different names. And they all get busy on certain days, which is one thing I realized in trading, right? Sometimes the tech industry's hot, sometimes it's healthcare, sometimes it's a particular company. So you kind of have to be prepared for everything on every day.
So what do you think is similar about trading E-mini, S&Ps, NASDAQ, and indices, or even Forex to sports betting? Like what makes a trader perhaps a better sports bettor than someone who doesn't have this experience?
Yeah, I would say the understanding of just like data and price moves. So one very simple thing is in sports betting, like it matters the odds you're getting or the price you're getting, just like any trader, would consider the price, right? If you're buying Facebook at $200 versus $300, that's a big difference. And that's like something important. Whereas in sports betting, like a lot of people don't even think about that, right? They think, oh, I like LeBron James. I like the Lakers. Lakers are going to win the game and they bet on the Lakers, but they don't really think about the price they're getting, the odds they're getting, right? So I'd say in sports betting, it's very data driven. The way the sports books work is the same way a market maker works. They charge a spread, right? So the same way a market maker will be like, oh, I'll buy this at 10, I'll sell it at 11. That's the same way the sports books work. They charge a spread. So literally in every single way, sports betting is similar to trading. Prices, price movement, markets, line movement, like all these things, ultimately, they're also related. So I would say almost all the concepts I learned as a trader apply to sports betting in some way.
Actually, you make a really good point. I mean, price is very, very important. And in trading, we've got a number of different brokers. We never really know if we're getting the best price. And one of the tools that you offer basically shows you what the price is at for every sports bet at any point in time amongst the different brands. Is that correct?
Exactly. Exactly. And that's what's really crazy about sports betting is if you think about, the price of Facebook, you may have slightly different fees if you want to buy it on E-Trade versus Fidelity. But in general, like the price is the same. You're not going to see $200 on Fidelity, $300 on E-Trade. Like that's not the way it works. The markets are too efficient. Whereas in sports betting, I mean, I can just, give you a very simple example is if you look right here, like these are crazy different prices. So this is Thursday night football, first NFL game of the season. You can see the Lions are plus 230 on Unibet. So you have to bet 100 to win 230. And these are all the sports books located in Virginia, which is, currently where I'm at. And you can see like that's not a good price because other sports books are giving you plus 252, bet 100 to win 252. So it's literally like having, hundreds of different prices for a stock where like, Fidelity has the price of a stock at 240, E-Trade's 230, whatever. Charles Schwab is 220. The market is extremely fragmented, extremely inefficient. All these books set lines independently. And because sports betting is new in the US, everyone tries to enter it. There's hundreds of sports books that have launched. They're all trying to set their own lines independently. So it's literally like having a different price to Facebook. It's like a different market. Every book sets its own market. You can see like there's line movement charts. Every book moves lines independently. So it's like Fidelity, E-Trade, Robinhood. They're all managing the price of Facebook, have to move lines around due to supply and demand, new news in the market. It's crazy. And that's essentially what you get in sports betting, a very illiquid, very fragmented market where every book is trying to set lines independently. And, that means a lot of opportunity for us as a sports bettor. If the markets are efficient and pricing is always perfect, it's going to be pretty hard to win, to get an edge, right? It's kind of like the same way in crypto. There were a lot of inefficiencies that people started to take advantage of. FTX, that's their claim to fame. Not that I'm supporting FTX, but like, he got started in crypto arbitrage or whatever. Like you need to find, new ways to get an edge over, in trading, it's the market maker, I guess. In this case, it's the sports book.
So it sounds like one of the main differences between sports betting, obviously besides the instrument that you're playing with your teams, is that there's actually a larger divergence in prices than you would have when you're trading, especially exchange-based instruments, and that you can take advantage of that, basically arbitraging these different prices in order to potentially make some profits. That's not just about your opinion about whether the Lakers are going to win or not, but it can actually be something a little bit more methodical, right?
100%. 100%. Just like most people probably know, if your trading strategy is, wake up, see what CEO looks good on TV and then buy the stock, like that's not like a good trading strategy. It has to be data oriented. But I mean, like when I talk about like this is very similar to trading, is like, betting on the Lions is like selling the Chiefs. So if you're buying the Lions, it's like buying a stock. If you're buying the Chiefs, it's like selling the Lions. It's like shorting the Lions, right? And you can see here, this is the spread I'm talking about, where you can see on like this one, Circa Sportsbook. A lot of people may know Circa Hotel in Vegas, really big hotel, is they have a $40 or 40-cent spread. On the Lions, you have to bet 100 to win 220. That's what plus 220 means, betting 100 to win 220. Whereas the Chiefs, you have to bet 260 to win back 100 in profit. So that's a $40 spread. It's like a market maker saying, I'll buy this stock for 220, I'll sell it for 260. That's how they make money. So like these concepts are very, very similar. And just like understanding trading strategies is extremely useful, when you get into sports betting. Like I would say the most successful sports bettors started out as traders or poker players or something like that, where they have a sense of like how to gamble, make informed decisions, based on data with an edge, risk and capital.
Yeah, you're right. I mean, the best traders who win in trading are the ones with a mathematical edge. And it sounds like Oddsjams basically gives your community the same edge that, we really want them to have when they trade or when they're looking at sports bets. And what I really like about what you're talking about is that how it's very data driven. So I want to dive more into this because this is not just about motions. It's more about, making bets and making picks based upon, data. So can you just walk us through maybe 3 of the simple strategies that, or just simple strategies that you can have when you are using your platform for sports betting?
Yeah, exactly. 3 simple ones. So the first one is, it's very simple, but I would say it matters for the serious people. Again, this is not the type of thing that maybe matters if you're betting $10 a day, but this is free, right? This is called line shopping, or it means price comparison, right? So what that means is getting the best odds. If you want to bet on the Chiefs, you'd rather bet on them minus 260. And if you're not familiar with odds, a way you can kind of view it is, would you rather buy a stock at 260 or 335? And it's like 260, right? So they're offering the best price. So the first strategy is very simple. It's just like line shopping, getting the best price, getting the best odds. Literally, like if Fidelity had the price of a stock at 260, E-Trade, just like this little flip logo, they have it at, this kind of like green, red, and dark blue one, they have it at 335. So the first thing is just getting the best line, and that's completely free on Oddjam. So it's kind of like a Bloomberg terminal for sports betting. Any market you want to look at, whether you're betting on specific players, whatever, it's just all the prices from every different sports book updating in real time. And again, what's crazy about sports betting is all these books are setting their own prices. So it's extremely fragmented, right? If LeBron James gets injured, every single sports book needs to move its lines, right? So, I'm assuming there's a lot of sports fans, so a lot of people will know Patrick Mahomes, but you can see these lines move around, right, on all these sports books. If Patrick Mahomes gets injured, they all have to adjust to that new information in real time. The same way, if, a bank goes bankrupt, obviously, hopefully that doesn't happen, but stock prices start to fall. But again, it's not as fragmented of a market as sports betting. So whenever a player gets injured, hurt, all these books have to update. And sometimes they screw up, sometimes they're stale. So the second strategy is called arbitrage betting.
Before you get into that, I have a question, a follow-up question. So it sounds like, first I have a follow-up statement, which is that if you can bring back up your line bets, it sounds like that, the line bet information and the, kind of a screener on what's the cheapest bets is given for free, right? To anyone who signs up for the free accounts.
Yeah, so let me share my screen. I can show it again. So this is free. And again, these sports books offer so many markets. The same way you can buy a stock, you can buy a future, you can buy out of the money calls, in the money calls. Market makers have, there's so many things you could buy on Facebook if you wanted to. So many different structures. It's kind of the same thing in sports betting, right? You can bet on player passing completions, player rushing yards, right? And all these books have different prices, different lines. David Montgomery, big running back, right? His line is 47.5 on some sports books. Other sports books have them up at 50.5. The market's very fragmented.
So all of this, even the deeper player bets, are all given for free.
Yeah, exactly. Any game, any sport. It's literally millions of odds updating in real time.
Okay, that's
kind of like how we started.
And when it comes to, I know many people are probably just betting on using DraftKings or FanDuel. In your experience, are they the best price or close to the best price? If I'm using DraftKings, should I feel like I'm getting a really, fair pricing, or do I need to be a little bit smart about this and really, because they've kind of owned the market, know that they're not necessarily the best place to be placing my bets with?
Yeah, definitely not DraftKings, but or FanDuel, but I would say, yeah, it's one of those things. Again, I always say this. It's kind of like if someone's trading. Someone's like, oh, I want to make a $20 trade once every 3 weeks. I don't really care if I make money or don't make money. It's more like recreational. It's none of these things really matter because you're not really trying to make money. You don't really care. It's more for the people who really want to make money. It's you got to have more sports books because all these books have different odds. All these books have different prices. And another thing I've told people, before is all these books, sports books, they typically offer, you can see here's one sports book in Virginia. It's in New York. It's called Prize Picks. like for new customers, they give you $100 when you sign up. And it may seem like too good to be true, but it's like Robinhood. Oh, they give you a free stock when you sign up. But all these books, it's like, Prize Picks, you can look up FanDuel. All these books are in, well, FanDuel, it's hard to see what it is right now. But all these books are in competition with each other for new customers because they all do the same thing. They take bets. So they all offer these like lucrative promos to sign up because for them, a customer, if that customer, isn't good at gambling, I think the average person loses $2,000 on a sports book every year. So like they pay up, they'll give you $100 to sign up. So most of these books have pretty attractive promos when you first register anyways. It's not like Robinhood where they give you a $1 stock or whatever it was when I signed up. They give me like a $1 free stock or something. It's like on sports books, it's $100 per sports book you're getting just to sign up as a new user offer. Like a restaurant giving out free appetizers to try to get you in the door. Is all these books, there's hundreds of sports books in the US. Most of them have like $100 to $500 sign-up offers. Again, because they're LTVs off a recreational bettor, someone who has no idea what they're doing, is like $2,000 per year. And again, that maybe sound like I'm trying to incentivize people not to gamble, but obviously it's like most people don't understand how to actually trade or how to actually bet on sports. So you can still like take the bonus money and then make money off the books. It's just obviously most people don't do that because they don't know how or they're not educated.
It's just like trading, right? I think anyone who's a serious trader knows that, trading is not easy. The odds are stacked against you and most new traders lose. And when you realize that, the traders who truly win are the traders with an edge. And, we try to give them as an edge, you and I, in as many ways as possible, either through trading strategies, trading techniques, trading tools. So you talked about how, one of the free tools that you offer everyone is scanning the markets for the best place to place your bet at any point in time. I know you popped up a screen on arbitrage. Do you want to talk a little bit about that?
Yeah. So arbitrage is the first strategy I used. Again, like getting the best prices, like kind of like an intro level, I would say. But what arbitrage is again, all these books, they all set prices independently. So sometimes, like any of these sports books, if you look at them, right, they have tons of different lines, odds you can bet on. Most sports books have like 10,000 different things you can bet on at any given time. And they're managing their own prices, their own lines independently. So sometimes these books get super out of sync with each other. And you can bet equal and opposite outcomes to make a risk-free profit. Arbitrage, right? Like buying a stock for 10, flipping it for 11, right? How, again, FTX, I think that's how it got big, like crypto arbitrage. Buy something for 10, sell it for 11, make that risk-free profit. And it's possible in sports betting. And again, what stinks about sports betting is most of these books, like a lot of people hear risk-free money. They're like, oh, it's too good to be true. Which obviously makes sense. It raises alarm bells, but the markets aren't that liquid where you're going to be able to bet these arbitrage plays for like $10,000. Usually it's like $1,000 max bet size. But here's a simple example. If you used both of these sports books, Pinnacle and Hot Streak, you'll see they have this big discrepancy in Brandon, Pafat over under 17.5 outs. So these are equal and opposite outcomes, right? So when I talk about arbitrage, it's like, if you think about arbitrage in the stock market, you're buying and selling the stock. You buy it for 10, you sell it for 11. You have no risk. You bought the stock, you sold the stock, equal and opposite outcomes. It's the same thing here. If you bet him to go over 17.5 outs and under 17.5 outs, you have no risk. But what you're going to see is Pinnacle, they have really juicy odds. So I can zoom in a bit. They have really juicy odds on the over. They're giving you plus 102. So plus 102 means, again, bet 100 to win 102 in profit. Now, Hot Streak, their model is way out of sync. And you can see here, they're giving you plus 102 on the under. So this is a very simple example, but let's say you had $500 on both of these, right? You can bet $500 on both. Or let's make the numbers easier. You're betting 1,000 on both sports books to win 1,020. Right. So if he goes over 17.5 outs, we bet 1,000 on Pinnacle at plus 102 odds. Plus 102 means betting 100 to win 102 in profit. So in this case, 1,020 in profit. So if he goes over, we win on Pinnacle, 1,020. We lose on Hot Streak, 1,000. Our net profit is 20. If he goes under, it's the same thing, right? We win 1,020 on Hot Streak. We lose 1,000 on Pinnacle. We make a risk-free profit of $20.
So this is what you were doing when you were starting out, and
Exactly. This is how I made my first $40,000 sports betting. I would get home from work. I would literally just scan the market for arbitrage bets. All day long, I would hit them. And sometimes I picked this example because it's simple. The numbers are the same on both sides. But you can see here, it's like, okay, there's 207 sports books, 208 on Oddsjam, tons of sports books. This is a crazy big arbitrage bet between Betway and Hot Streak, both sports books in Virginia. And again, what's crazy is this is money we're getting back tonight, right? This is a risk-free return in one day. This game starts in 7 hours. So this is a risk-free return of 3.29% today, right? So it's also like things compound quickly. You can grow your bankroll or, earnings pretty quickly. So if you have both sports books, most of our users will have them both logged into. They'll go to both sports books, hit this for $250. Then this tells you, hey, this is called an arbitrage calculator. Tells you, hey, bet 185.19 on Hot Streak. You make a risk-free 1481. Again, it's not glamorous. This isn't $1 million, but it's a risk, literally just logging into both sports books, 60 seconds of work. You place both bets, 1481 risk-free profit. You move on to the next one. It's a very easy way to make easy income. And I know it's crazy, but there's a learning curve. You need multiple sports books. You got to be quick. These are inefficiencies in the market. They're not going to last forever. So you got to have multiple books. You got to move quick. You got to know how to navigate them. It's work. It's not passive income. But again, where else are you going to get $15 risk-free for 20 seconds of work, logging into these sports books? So we do live streams too on, Twitter and our YouTube channel, just showing people, hey, here's how you do it. I just locked in, $5, $10 risk-free in 30 seconds of work. And granted, sometimes there's better arbitrage bets than others. Like right now, we have the benefit of the MLB going on, the NFL starting, college football starting. There's a lot of sports. So more sports means more surface area for books to cover, more opportunities, for books to screw up. So more arbitrage bets.
What I really like, Alex, here is that you're not talking about how to get rich quick from sports betting, but instead you're really talking about methodical, well thought out approach to generate income with steady, consistent, repeatable returns, and just doing this day in and day out. It's not big profits, but it adds up, and it's like a good side hustle. It's not your get rich quick, which I think is a much more realistic way to approach this than everyone's shilling out there.
Totally.
So it looks like you cannot execute from the platform, correct?
Yeah, you can't bet through the platform. There's no sports book, I don't think, in the United States that allows you to bet through not their app or website.
So you're purely a tool, for the community, for the user to gain an edge, and not an execution platform at all.
Exactly.
All right. So I signed up for your free trial, and I've been getting a lot of information, and there's a lot of information on your website about these positive expected value opportunities. Can you talk a little bit more about that? Because it seems like it's the next level of sophistication and strategy.
Yeah, exactly. So I would say let's try to think about how to word this. I would say a strategy that gets a lot of people to start sports betting is arbitrage, right? You bet $10 here, $10 there. You make a risk-free dollar in profit for a few minutes of work, and you can build your bankroll. But a very simple way to think about what positive EV betting is imagine you say, okay, right, there's this risk-free profit in the market, arbitrage. These sports books are out of sync. But what if we just took the good trade, right? It's kind of like imagine if you logged into Fidelity, E-Trade, Robinhood, all these different stock brokerages. Everyone has the price of Facebook at, $300, and then Robinhood just has it at $200. You look at all the data points, right? Fidelity, Charles Schwab, all of them, And you'd be like, what is Robinhood doing, right? They're pricing this way below the rest of the market. Everyone else thinks the price is $300. They're pricing it at 200. The market's pretty smart, right? That's where supply and demand meet, whatever. That's like all beliefs in the market, right? If they're efficient market hypothesis, not that it's perfect, right? But you kind of get the point. It would be like, oh, like I'm going to buy this on Robinhood. So it's kind of the same thing in sports betting, is using market information, right? Like not historical data, but our most popular tool and most profitable tool is this tool. It's called the positive expected value tool. And all this tool does, again, is it's just reading in millions of lines from these different sports books, hundreds of different sports books, all of them has tens of thousands, 100,000s of lines, and pointing out value. So like this guy, Brandon Woodruff, in this hot streak platform, I mean, clearly there's a lot of opportunity on them. It's a new sports book, very inefficient market. They're pricing this guy's under 17.5 outs at plus 122. So you have to bet 100 to win 122 in profit. Every other sports book has this at, it's called minus odds. So as the favorite outcome, right? So like Caesars is minus 117. That means you have to bet 117 to win 100. So they're offering significantly worse prices. So long story short, this tool is just pointing out big value in the market. And maybe that's not the best example because of the minus versus plus. And I think that can be confusing for, new sports bettors sometimes. But like, here's a simpler one. Andrew Benedetti, him to get 2+ hits over 1.5 hits, you're getting plus 185 on Unibet, this sports book in Virginia. All these other books have it around plus 150-ish, right? Plus 140 on Flip. So all these books are data points, right? They're all markets. They're all data points, right? So the way I think about it and tell new people to think about it is imagine like Charles Schwab says, hey, this stock is worth $165. E-Trade says 133, right? Yada, yada, yada. And then you get 185 on, this sports book. You're betting 100 to win 185. So it's kind of taking your emotions out of sports betting and just saying, hey, the market is smart, right? The sports books are smart. These are $10 billion companies like FanDuel, DraftKings, Caesars, right? These are billion-dollar companies. They've invested a lot of money into their ability to set lines. They're also moving lines around. I mean, that's not a good example. But, right, these books, they have access to flow. So they have access to bets coming into the market. They know which customers are up money on them. So if all the smart people, start betting on this guy to get a hit, they'll move the line. And you can see books move around lines due to supply and demand. Some books more than others. Some books do big jumps, but some books, pretty consistently move it around. But it's kind of just recognizing like, okay, like these books are billion-dollar companies that have invested a lot of money in their ability to set lines. The market is pretty smart. These sports books are pretty smart. It also reflects overall where sports bettors are placing bets, right? Like, it's a market. If everyone came in and bet on this guy to go over 1.5 hits, sports books would, move odds in favor of him going over 1.5 hits. So when you're getting plus 185, these huge market outliers, discrepancies, you can arbitrage bet them, or you can just take the side that's, off from the market, the good bet. So essentially this tool just shows you that, right? These way off from the market line discrepancies. Here, the Seahawks, minus 110 on Circa. Every other sports book has them around minus 140. So if you're in, Las Vegas, this is only a sports book in Vegas, this would be a great bet to go with, right? Because they are way off from every other data point. Every other sports book setting lines has ripped odds towards the Seahawks in week 1. Circa setting their line still at minus 110. So you're getting significant value relative to the market. So kind of like a way I explain this to people who have trading backgrounds is like, if you just imagine, I said, hey, you want to buy Facebook from me at $200. What you probably may want to do, first things first, is see where is it trading in the market, right? The market, this is the point where supply and demand are equal, right? You have all these smart people like, Kathy, and like, these hedge fund guys, these trader guys, these mutual fund girls. And, it's like there's tons of people who wake up every day and determine, hey, is Facebook overvalued or undervalued? And this is where supply and demand meet right now, $299.85. So like if you could buy Facebook at $200, like it would be a no-brainer. And you don't have to know anything about Mark Zuckerberg, Facebook. You wouldn't even have to know anything about Facebook as a company, right? It's like the market, which is the beliefs of all these smart people like Kathy, where supply and demand is equal, is $299.73. And you're letting me buy it for $200. Like that's a no-brainer. So it's kind of the same thing in sports betting. You don't have to know anything about the Seahawks. You're getting significant value. You're getting this at 110 when all the other books are telling you, no. This should be worth 140. And again, there's a little bit of a learning curve, but it's the same concept. And again, the market's super fragmented. This is literally like having a stock at 110 on Fidelity when it's 145, 130 everywhere else. It's crazy. It's super fragmented.
Does this actually require me to take a second position as well? Or am I just seeing that, the Seahawks is priced well and I'm just taking that one view?
Exactly. And it really is the like keep it simple, stupid mentality, right? And by that I mean like if I told you, hey, you want to buy my Facebook at 200, like it should be a no-brainer response, yes, right? Like I think everyone watching this video will know that is like it's trading in the market at 299.73. Maybe you don't think the market is that smart, efficient, whatever. Like you could literally go sell it in the market for $299.55 and make a risk-free profit of $99.55, right? Like buying it at $200 is a no-brainer type of thing. So even if you don't think the market is smart, you could flip it in the market for a $99.50 in profit. So it's kind of just like, yeah, exactly. So it's kind of just like follow the market, keep it simple. So many people like to be like, but I watched, this guy this summer and he didn't look that good. Any public information is baked into the market, right? Like Facebook's last earnings report is baked into the market, right? Like if they made money or didn't lose money, like you can't look at their earnings report from 3 years ago and be like, they had a bad quarter, I'm going to sell the stock, right? It doesn't make sense. It's already priced into the market. It's public information. So it's kind of the same thing here, right? Like everyone knows the Chiefs won the Super Bowl last year. Everyone knows what the weather is going to be. It's public information. It's baked into the market. So find value in the market, this very fragmented, very inefficient market, and don't overcomplicate it because all this other stuff is already baked into the market. Oh, it's going to be raining. It's baked into the market, right? Like it's cold in Seattle. It's baked into the market. Like you see so many people be like, it's going to snow for this football game. I'm going to bet the under. It's hard to run in the snow. It's like the sports books know this. Other bettors know this. It's baked into the market. It's kind of like being like, Facebook, whatever has Instagram. Instagram's a great company. I'm going to buy Facebook. It's like everyone knows that. It's baked into the market. So it's really just like keep it simple. Find value in the market. And again, it would be like being a day trader if you went to Fidelity, E-Trade, Robinhood, and they all had vastly different prices for stocks. It would be a much different ball game. Of course, in trading, it's harder because the markets are more efficient, yada, yada, yada. But in sports betting, it's very inefficient, very fragmented, but lower betting limits, and that's a downside.
So, you and I both know that, emotions oftentimes get the better of traders. And that's one of the greatest challenges that traders have. So it sounds like with your tool for sports bettors, it helps remove the passion, the emotions that someone may feel about a team and player. But do you think that having an opinion on a team or player can actually help you screen for better bets? Or is it just better to stay agnostic?
Sure. I mean, I never want to say never. It's kind of like when people are like, do you think there's a Warren Buffett who can just see the future and predict what's going to happen with companies? It's like, I mean, sure, but probably. But so there probably is someone who can just watch games and know. But the thing is like, it's just kind of being rational about your own abilities. Like, I'm not that guy. And nobody I know is that guy. I mean, a better way to put it is, again, these sports books, 99% of customers just go, they watch sports. Everyone watches football who's betting on football. They all go to FanDuel. They think they know football. They bet on football. And the average LTV of those customers is like $2,000 a year. For the sports book, they all lose $2,000 on average. So like, it's really hard. Over 99% of bettors lose money sports betting long term. And they all watch sports, right? It's not that these guys don't watch sports. That's the issue, is they all watch sports. They're like, oh, I've watched every game LeBron plays. I know what's going to happen. It's like, oh, I've read every one of Elon Musk's tweets. Like, I know what's going to happen to Tesla stock. It's like, dude, no, you don't. Like, so I think it's one of those things. Like, I hate to be like, put people down and be like, no, but like, everyone watches sports and bets based off their sports knowledge. They all lose money. 99% of them. The 1% are using data, and it's like, it's kind of like, oh, can I go to the poker table, not know anything about poker, the strategy, the rules, and just bluff my way into money and like become the world's best poker player? It's like, probably not. Like, you probably have to understand the strategy, that type of stuff. It's kind of like, if I put all my money in Facebook today, could I win? And it's like, it could go up, right? It could go up the next week or so. I don't know. Right? Like, it's like, but like, is that a good strategy? It's like, probably not. Putting all your money in Facebook out of the money calls. Like, I wouldn't do that. But, like, it's one of those things. So maybe there are some people, I never like to say, oh, I'm the only one who knows how to beat the sports books. Like, maybe there are some people, right, who, really, especially the more niche sports like League of Legends, I think in the NFL, it's really hard. The markets, we're getting tons of action, very efficient. A lot of people watch it. Maybe like UFC, fighting, boxing, maybe. It's easier to get an edge by just watching the sport. But again, like, that's what everyone tries to do, and they all lose money. Like, you got to be different in some ways. And the markets are so fragmented, you can literally hit these arbitrage bets, make risk-free money. Like, why overcomplicate this is what I always tell people. Like, some people will be like, oh, cool. Like, you showed me how I can make a risk-free $20 arbitrage betting on DraftKings and FanDuel. We just made $20 risk-free. But like, I want to create my own model to go beat the sports books. And it's like, just take the easy money and like, if you want to create your own model, good luck. But like, FanDuel, DraftKings, these are $10 billion companies. They have really good models. You're not really going to be able to just spin something up that better predicts sports games than these companies that specialize in it, have thousands of employees. They're taking access, they're taking bets, moving around lines due to supply and demand. Just completely unrealistic.
I think, that's really the point. It's kind of like trading where 99% of the traders lose, and you want to be the 1% that actually wins. And one of the ways to become that 1% is to focus on the odds and to find the easier picks, the easier trades. And if you've got a tool that can simply help you identify, what's the pricing for this one game right now versus the pricing of another game, that can be, a kind of a high probability win because you're just comparing the pricing and odds. And because, as far as I understand, the market is so illiquid, you're taking advantage of an arbitrage opportunity in something that you may not have in trading. So it sounds, pretty cool. It sounds pretty neat. And it definitely sounds like something I think traders can understand.
Exactly. And I will say it's just like trading. And by that, I mean, like, there is a learning curve. So a simple example is like, you have to put in the work. Like, everyone wants to make money, right? Everyone wants to have a great job and career and be a great trader, right? But the truth is like, it's some work to like understand these things, understand these concepts, how to do them, get them set up, really understand how to win. And it's kind of like, on Oddsjam, we have a lot of people. I mean, and anyone can do their own research about arbitrage betting, all these things we've discussed. We have lots of people who bet on sports full time, but they put in the work. They already knew it, or they come from trading backgrounds like this person, or they like have put in, the work to understanding like what's going on. Again, the way when people start sports betting, like the way the sports books get most people is they get a lot of people who see an ad on TV for DraftKings. They're like, oh, I watch every football game, sports, gambling on sports. Like, I would crush that. and then they just start throwing around money and they get obliterated. It's kind of like the person who's like, oh, it's kind of like the what's a, like a model who's just like, oh, I know fashion, like, and starts trading like, retail stocks. It's like, you gotta like put in more work than that, right?
How would I, yes, I'm interested in doing this. How would I put in more work? I mean, where do I get started? How do I learn about doing this?
Yeah, so I would say we have tons of articles, videos on, YouTube. Oddsjam has a YouTube channel, tons of articles about this type of stuff. And it's more just like, there's tons of Reddit forums about arbitrage, people not even related to Oddsjam, right? People explaining themselves like, hey, here's how I made $5,000, $6,000 arbitrage betting. Here's what I did. Here's the pros and cons. Here's tips I have, yada, yada, yada. So it's one of those things. It's just like, it's not something to dive in. Like, I feel like a lot of people, they see sports betting legalized in their location and ad for DraftKings and they want to get started. And like, that's great. But like, take a step back and like think about, because it's proven, like there are various proven methods like arbitrage. Like arbitrage is risk-free money off the sports books. It's like pretty simple, right? It's risk-free money. Like it's all pros. And there's tons of videos, tons of people explaining it, but like go seek those things out, right? And like learn a bit about them. There's tons of stuff on Oddsjam about it. But again, it's like it's like the trader who just wants to log in to Fidelity and do whatever they want and never spend time learning. It's like they're hard to help. Like you have to like want to be better and like learn how to make money because the information is out there, whether it's on Oddsjam or somewhere else, right?
So I have to ask, I mean, a lot of these arbitrage opportunities, I mean, would I have to catch it at a specific time of day? How much time do I need to spend to make money from this? Is there a specific time that is the best time to look for these opportunities, or does it just not matter?
Yeah, it doesn't really matter. Not actually. Like obviously days with more sports, there's a higher likelihood of there being better bets. But it's kind of one of those things like if you knew, if you knew when Facebook was going to fall 3%, like that would be a good time to short it. It's one of those things like you never know when a player's going to get injured. LeBron James gets injured, lines get crazy, line movement, tons of opportunity. Like most of those things are hard to know in advance. And what's crazy about sports betting versus most, like let's say the stock market is it's open 24/7, right? Like, what I mean by that is like, there's always sports going on. You can always place bets. Players can always get injured. Line movement can always occur. Sharp action can always come in, moving around lines, right? If all these smart people start hammering a team to win, like lines are going to move towards them. So really any time of day, like I place bets at 1 a.m., 2 a.m., 3 a.m., 4 a.m., like any time of the day, I'd probably hit hundreds, thousands, tens of thousands of bets during that hour of the day. So it's just like the more kind of the merrier, it's kind of like with, what's a good example? I don't know. The more time you put in, the better, I guess.
Yeah. I mean, it sounds like, you said you did tens of thousands of bets. It's really about those $20 adding up incrementally. And that's why, it's small, frequent, it's about the law of large numbers, small, frequent bets to add up to, the side hustle, I guess, the side hustle money that, we all hope for.
Totally. Exactly. I made like $40,000 arbitrage betting when I first started. To a lot of people, it's like, that's what sounds great. But when I tell them like, yeah, I got home from work, I'd like arbitrage bet for an hour, half a day, like make $220, whatever, 200, 250, some days slower, 150, some days incredible. If I spend more time on a weekend when I'm off work, I'd make $350. Then they're not as attracted to it because it's like, oh, it's work, right? But no, I didn't just like bet $1. It turned into 40 grand, right? It was slow and steady, 100, $200 a day, but easy money, right? These markets are very inefficient. And especially like if you have higher betting limits, if you have access to more sports books, some of them have bigger betting limits, like it's really easy money. I mean, it's just easy money. The markets are so fragmented. Tons of arbitrage plays can lock them in, make that risk-free profit.
That sounds really, really interesting. So what does someone get out of an Oddsjam subscription? I know that if I sign up for the free trial, I have access to the lines, and you'll send me information on interesting EV Plus trades. What can I get out of a subscription compared to the free trial?
Yeah, so the trial is just free. It's free to browse odds on Oddsjam. There's a lot of free features on Oddsjam, but the arbitrage plays are what are behind the paywall. And there's a free trial. So, and there's a money back guarantee of a month. So we always tell people, if you're not, making money, you have 5 weeks to try it and figure it out risk free. We understand there's a little bit of a learning curve. So you don't get charged for 7 days. It's a free trial. And most people will sign up for a few sports books during that trial. They'll hit some arbitrage bets. They'll kind of get a feel oh, wow, that arbitrage bet moved on me. The market moved on me. That was crazy. The sportsbook odds changed in front of my eyes. I got to be quicker. But people start to get a feel for it. I would say, and yeah, then it's just kind of then you start paying and you have access to all these betting tools. But if you don't like them, you can get a refund. Take it, but most of our users end up having success. It's data driven. It's free money. Once it clicks for people, once people figure it out, they place their first couple arbitrage bets, then usually they're happy. So we always say, we try to build, we want smart people, long lasting relationships, whatever. We're not it's a free trial. You get your first month risk free. It's a money back guarantee. We don't want people who just come on for a month and then, can't figure it out. And then, we just charge them. That's not the point. We want people who are going to use this ideally for months, years to come, and make money off the books and get a better understanding of how to. Just better for us.
That's great. So, really good information here, Alex. It was a pleasure having you on. And for those of you watching, I'm including the Oddsjam link in the description below this video. So definitely head it up. Check out the free trial. Check out the lines. See if it's something that, you're interested in. But, lots of great information here from our former traders, really taking, a trader mindset approach to and a data-driven approach to sports betting. And I think, that's the only way to become the 1% and not the 99% who lose in sports betting. So if you've got questions, drop them in the comments below, and we'll, hopefully have Alex back on to answer some of them. Thank you so much.
Thank you so much. That was awesome.
Thank you.